I wouldn't look at seasonality here. Markets are definitely strong right now, and the economy just looks so good. It's just like, how can you not love the economy and the market right now?
Well, but there are some reasons, like the FANGs and financials right now, which would be a little bit scarier to play in. What are you doing?
I think, it all looks pretty good. I mean, let's face it, the financials had a huge move last year, and nothing moves in a linear straight line. So I think it's fair to see a breather in financials right now.
What about FANG?
FANG? I mean, I think this is a good indicator.
The whole market has been a FANG market. That's been the market. When people talk about the market, they almost should disregard just about everything else.
Except for small cap stocks are at an all-time high right now. Mid cap stocks are at an all-time high right now. So it's kind of like we have a bull market that's in plain sight. We're not even talking about it.
Where are you at?
Well, the economy looks good. I mean, no question about it. I think there's a little bit of a tug of war, though, between the good economic news and worries about trade. And I think the trade stuff has been weighing on markets and weighing on folks.
Have you been doing anything, positioning yourself differently as a function of the potential trade war? Everybody seems to talk about it.
People talk about it.
But then when you say, what are you doing about it?
Yeah.
They say, actually, nothing. I'm just talking about it.
What are you going to do about it? I mean, our base case remains it doesn't escalate into something that is really metastasizing into a broad-based trade war. But, there's a non-negligible risk that it could. Right now, the stuff that's been enacted, not likely to move the needle too much on the macro economy, and we're hopeful that this thing doesn't escalate, but we have to watch it closely.
I mean, everyone kind of says, well, look, even this level of tariffs on this level of imports in a $20 trillion U.S. economy really doesn't budge anything, and totally agree, the math works that way. But if the catalyst is going to be, or the chain reaction is, well, emerging markets, much more dependent on exports, slow them down a lot. Oil prices in emerging market currency terms are actually really high right now. And so if that kind of spills into market
and if it spills into sentiment, right? If businesses start to say, hey, wait a second, I don't know exactly where this is headed, I'm going to pull back a little bit on CapEx, that's when you start to get some bigger things. And if it hits financial markets, and that starts to adversely affect wealth and sentiment. So, look, you can
But you think none of those things are going to happen?
Not to that extent, no. But they're in the risk case.
Where do you think the market is at the end of the year?
At the end of the year? I think it's much higher. I think
what is much higher? 5%? 10%?
I think 10% plus easily. I mean, I think right now, you have everything kind of working in your favor. Sentiment somewhere in the middle. No one's been overly bullish this year. Let's face it, right? The news just comes out better and better, and I think at some point you're going to be sitting in cash, thinking to yourself, how long am I going to wait while the economic news just gets better and better? And I think you're going to get capitulation on the upside.
Well, the question is, does the economic news get better and better from here? Or have we seen was the first quarter the best you're going to get? In fact, the consumer confidence numbers yesterday were great, and they're so good that historically they're kind of in the contrarian zone where it's like, well, don't know if we can build on that.
Look, the economy is good now. I think it's going to stay good for a while. Medium term, though, look, I think that at some point the economy is going to need to slow down. The labor market can't keep tightening forever. It can go on for a while, but medium term, I think there's going to have to be some slowdown in the labor market's tightening.